So what is a private limited company? Not sure? Well, check out this video as I go through all of the details. Hey everyone, my name is Simon Misiewicz from Optimise Accountants. I'm here to help you build your wealth whilst reducing your tax liabilities. And in this episode, we're going to be talking about a private limited company. But shh, it's private. Keep it secret. No, it's not. I'm going to tell everyone. So, what is a private limited company? Well, you may have already heard the terminologies that I'm going to be sharing with you. There are the following. First of all, we have something called an SPV, which is a limited company. It stands for Special Purpose Vehicle. It means that it's got one or two SIC codes and it is designed to do a special project, or it's set up to do one particular trade or activity. SPV. The second one is LTD. How many acronyms can you sustain here? That stands for Limited Company. Always curious about LTD. It stands for Limited Company, yet there's no T, unless it means Limited Trading Company. But I've only heard it as Limited Company. Maybe if you can post your comments there, sarcastic ones, in terms of what you think LTD stands for. And we also have a PLC. Not to be confused with public liability company or public listed company or anything like that. This is a private limited company. Okay, so PLC in this video and in this topic, we are going to be talking about a private, secret, limited company. Okay, let's follow me on the next journey. And before we talk about that, actually, there is a link appearing just above my head now, which talks about property tax structures. Now, if you're in the property game, you may have heard phrases about LLPs and, you know, what are the benefits of those. Do go check out that video for more details on that. But we're going to be focusing very much on the private limited company. So we're not going to do comparisons like that video did. We are going to be pretty much focusing on private limited companies. Now, what is the difference? Now, some of you may be thinking, well, I'm a sole trader. Do I need to be in a limited company? Now, let's take, for example, you could be a hairdresser, a beauty salon, or you could be a management consultant, or you could have a manufacturing company, and there's degrees of risks associated with each one. There's also a degree of difference of earnings as well. And what we will be focusing very much on, and I think it's the only two focus points of what makes a difference between a sole trader, where you are taxed in your personal name, you have all the risk and liabilities, and a private limited company. Really, it stands for two things, and that is the risk and tax. Now, the risk element, let's imagine that you're a hairdresser and you accidentally chop off someone's fingers. Bad example, I really do apologize. But imagine you did do that. No, don't imagine it. Just follow me through a theory perspective. But imagine if you did do that, then you have a claim against you. Now, if you're in a sole trader capacity, that person could make a claim on your personal assets. I'm talking about not just your business assets here. I'm talking about your home, your car, your dog, your cat, your children, maybe not your children. But they can make a claim against everything in your personal name. Not a pretty sight. But in a private limited company, the risk is just shielded by that company. Someone suing that company cannot go for you as an individual or your assets. The other side is tax. In terms of running the company, you will pay less tax potentially than if you've got money going into your personal affairs. If you are a sole trader, you will be doing a personal self-assessment tax return, and it will do all the calculations and you'll understand your tax liability. In a limited company, it's quite different, and we'll go through examples of that in a second. Now, for limited companies or private limited companies, people do shy away from them, and that is because there is extra paperwork involved. There's the setup of the limited company, but there's also the annual accounts and the annual tax returns that must be done for that limited company. You see, the problem is that private limited company is a separate entity from you. which basically means that it has to do the same things you do, which is the accounts, the tax returns. It doesn't stop you then from you having to do your own personal self-assessment tax return to HMRC. You have both to do. So it's a lot more paperwork. You've got annual confirmation statements as well. If you've got property, you've got to do this thing called ATED reports. And you've got to make sure that your register of accounts is up to date to tell the public who the directors are, who the shareholders are, etc., etc. Now, let's talk about the level of tax. Now, in a personal name, we're going to have one set of tax rates. And in a corporation tax, you have one tax, which I'm sure you can see already. These numbers are pretty much the same. So no matter how much money you earn in your business activities, you will still pay 19%. But if you're a sole trader and you're submitting personal self-assessment tax returns to HMRC, then your personal allowance will be there for you. So you could earn up to £12,500 and not pay any tax, which if we look at the company's actually paid 19%. So straight away, if you've got that level of income stream, it makes no real sense from a tax perspective to use a limited company. If you're a basic rate taxpayer earning up to £50,000, then your basic rate tax band would be 20%. Which really is only 1% more than a limited company. Is it really worth the hassle of setting up a limited company with the shares and the directors and the share blah, 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 doing the annual accounts and tax returns as well for the 1% saving? I'm not convinced. Where it does come into its own is if you are a high rate taxpayer and your earnings now reaches £50,000 all the way to £150,000, or indeed above £150,000, because you are now going to be paying 45% income tax. Let's not forget national insurance for trade activities as well. So you can already see now that this now becomes interesting. I would say, I'm just going to try and highlight this. So let's see. Oh, it won't let me do it. Oh, will it? Let's just try. Green. Okay, cool. Let's try it. Never done this before. This is live, so I'm going to mess this up royally. I may as well do it properly. Okay, so here we are. So I would say that if you're in this type of bracket, then using a private limited company for your trade activity makes no real sense. If, however, your trade activity exceeds that and then jumps into this bracket and you do not need all of the money out of the limited company, then it makes all the sense in the world from a tax perspective to use a private limited company for your activities. Again, management consultant, hairdresser salon, property business developer, you name it, whatever, you retail even. If you're going into this, then maybe a private limited company would be the right thing for you. Now, what I've done here is to show you how much money, if you earned £100,000 from your trade activity, how much tax you would pay. And I'm now going to look at this from a income tax perspective. Okay, so this is now looking at your income tax rates. And what I want to do now, I'm just going to change my pen color because I noticed it go really wrong last time when I tried to do this. So let's just have a look at that. So here we are. So anything from 0 to 12,500, we said already you pay no tax, which is a big advantage over the limited company. If you're a basic rate, and obviously will do because you're earning £100,000, so you're in excess of that, you'll pay £7,500 income tax. Now you will have earnings from 50,000 to 150,000. Now, people watching this will say, well, hold on a minute, isn't it up to £150,000 per the previous slide, you numpty? Yes, you're right. Well, not the numpty bit, but you know, up to, we are saying earnings up to £100,000. So we need to look at just the 40% tax band from that 50,000 to 100,000, which gives you £20,000, which is now a tax liability of 27,500. That is the amount of tax that you pay in your personal name. Never mind the income tax threshold that you'll have as well. So you do need to do some extra calculations. Now, in a limited company, though, if we look at earnings up to £100,000, then we've already said that the corporation tax is 19%, which is £19,000. which if you do a comparison straight away, you could see, well, your limited companies earn £19,000. You would be personally taxed at, oops, that's one wrong. You would personally be taxed at 27,500, which is a nice saving actually of 8,500 by using a private limited company. Now this does presuppose that you're leaving all of the money in that limited company. So you do now need to figure out, well, how much money am I going to extract out of that limited company and how much income tax will I pay as a result of taking money out of that private limited company. So how much money can you extract out of the limited company tax-free? Well, I'm glad you asked, so let's go through the details. So the first one is wages. Now you can take out of your limited company 8788 wages. That's free from tax, income tax. It's also a tax reducer against corporation tax. So your corporation tax will be reduced by the wages you pay yourself. And in this case, 8788. Now, this number is really odd, I appreciate, but it means that you will be free from paying employers' national insurance and free from paying employees' national insurance. That's why it's so tax efficient. So that's the wages you should pay yourself. You can take out additional dividends out of the limited company from the profits it makes to get to your normal banded personal allowance, which is the amount of money you can personally earn without paying any income tax. Now that is boosted, you'll be pleased to know, by a further £2,000. So that means that you could now take out of your own limited company £14,500 and not pay a bean in income tax. Now, I appreciate if you do take out more money than that, you will start to pay dividend tax or income tax on those dividends. So you do need to bear in mind, well, how much money am I going to take out of the limited company? How much tax I'm going to pay? That's not something I can answer in this simple video, but I have created a video, a link is appearing above my head and below this video, about how you can take £20,000 tax-free out of your limited company. So do go check out that video, and I talk about the different levels of tax that you pay after that. I've also created another video, which is a counterbalance from that video I've just mentioned. Talk about, well, why you shouldn't use a limited company. Again, that link is appearing above my head and in the video description below. Don't forget, if you want to save tax and build your wealth in business, then why not join the know-how community about saving tax? There's a 7-day free trial. I do weekly and monthly live Q&A to help you build your wealth and save tax. And there's a bunch of embedded tax calculators. There's a whole course with lots more videos than I talk about here and more descriptions with examples. So go check out that online community today and start saving tax tomorrow. There is a tax calculator as well of how you can extract money out of a limited company. It gives you different scenarios that you can benefit from to understand, well, how much money can you take out of a limited company and how much tax would I ultimately pay. So that is a tax calculator for $9.95. The link will be below this video. Don't forget to press like, and if you have any questions about this video, then please ask away. I want to make sure that you know all the answers. And don't forget to subscribe to this channel. If you want to discuss our service from an accountancy tax perspective, please do so. If you want to speak to me, Simon Misiewicz, on Tax Call, then you can book my time using the URL below, and there's a code YouTube25 to get a 25% discount. I look forward to seeing you on the very next video. Until then, my name is Simon Misiewicz from Optimise Accountants. See you again soon.